Ram is with Quint Financial Technologies, and he's going to talk about regulation-related information as far as the AI models is concerned. He's got a slide presentation put together for us. And do you want this? Yeah. Okay, because he wants to store his voice for the evening, so I'm going to give him the mic. I'm going to stand behind him, listen in, and chime in later.
Thank you. Good morning, everyone. It's been a wonderful 2 days for me. Learned so much of information, and I keep taking notes, and I keep updating my presentation. So I'm going to be a little bit of a wet blanket today, talking about regulations. I know nobody likes regulations, but the fact is that we all have to live with it. There's a lot of technology. There's a lot of hype going around. There's a lot of things happening, as you know, Gen AI, so many things. At what point, I was just analyzing, what point of time do the regulators kick in? When do the financial institutions start facing the heat of regulations? Now, these are just my thoughts. I see that when things are in a hype, when everyone is chasing the next hype, it was 5 years ago, this was blockchain. Every conference we were talking about blockchain. Now with the great crypto events that have happened over the last 5 years, I think blockchain is like yesterday's news. We were talking about metaverse, which didn't really take off. But the fact is that all these things that we were treating as hype or as latest technology 3 years ago, 5 years ago, things like open banking, cloud computing, mobile wallets, app-based payments, and all these are now mainstream. We are using this in our lives today. And that's why we see the regulators also getting interested. I was yesterday's Hari's presentation on what's innovation. And that was a fascinating one. One of the things that struck me is in that one is about Uber. Now, we all know Uber as ride sharing. They disrupted the entire taxi or the cab industry. That's what we know as. But how many of us think of them as having disrupted the digital or the mobile wallet industry? And think about it, before Uber, you could not make a payment within the app. So to me, Uber is perhaps, I would remember Uber being from the payments industry. I would probably remember Uber as being the one who taught us how to do mobile, how they taught us to mainstream mobile payments because you could pay within the app. So I think it is along those lines that we are moving ahead. Now we're talking about Gen AI, LLMs, et cetera, et cetera. There's so much of things that we hear about. But all this is also leading to a lot of attention from the governments and the regulators. I just read the 2024 economic report from the president by the U.S. Council of Economic Advisors. It includes a whole section on AI. I would encourage everyone to read that. It says, broadly speaking, it says 10% of the workers in the U.S. are at high risk of displacement by AI. 20% of workers could be displaced by AI. Mentioning this really means that AI now has the attention of the regulators. One of the lines that it says is that automating too quickly and may result in lack of accountability and access to services. The biases which are ingrained by the AI developers, which may lead to discrimination, is another point of contention. So what's the next hype? All this is there, and we're looking at it, but who knows? We're already talking about quantum computing. In September 2023, the BIS, the Bank of International Settlements, came out with a white paper on highlighting the risks of quantum computing to the global financial system. The summary of that is, what it summarizes, if quantum computing becomes mainstream and affordable, all this superstructure of security, and compliance and everything today in the financial services could just be blown away. That's the potential that quantum computing has. So the regulators are already looking ahead. And I think the difference now is the regulators are not waiting for these hypes to become reality. I think there is a lot of proactive interaction that's happening. Around 37 countries across the world are developing AI-related legal frameworks. The biggest one is EU. The ECB released, came out with a AI regulation, and it's 832 pages long. It's a typical EU document coming out of the EU, but it covers almost all aspects of adaptive compliance, ethical, and all the questions about DEI, risk management, of course, and security, and investment, what kind of investment that banks and the financial institutions need to make on regulations. And yesterday, or maybe a couple of days ago, the UK has tabled a bill in the parliament about, it's called the UK AI regulation as a data protection and digital information bill. And in that bill, I saw a casual mention that it refers to the EU rules. It also says that the US has only got an executive order on AI regulations. So I'm not sure if that's something that we can take credit for or we can feel good about, but the fact is that as of now, there is only an executive order on AI. But I would say the regulations are coming and financial institutions need to be prepared. The regulations, the executive order that says that it requires AI developers to share red teaming and safety results with the federal government. That's all we have for now. But there are more regulations coming, more rules coming. Sorry, I'm just referring to. Yeah, the current approach that I see among financial institutions now, I was at the Government Affairs Conference earlier this month, and also some of the other banking conferences. The approach that their financial institutions are taking is that the regulators are overstepping, their mandate from the Congress. So we have the CFPB, which is perhaps the most hated regulator today. Their circulars or their regulations or what they're passing on UDAP, on the CRA or the 1071 rule is not exactly is not being taken well. But at the same time, what it's doing is it's taking away a lot of time, a lot of focus on these regulations which we understand or which financial institutions understand versus the regulations that are coming on items which are more complex, which perhaps as yet we ourselves don't have a handle on. The late fee cap of $8 is perhaps the one that is going to affect a lot of institutions. One of the problems that is coming out of these regulations is that this is going to change consumer behavior. Now imagine that if you are you're a consumer who doesn't mind being late in payments. Today the fees is about $40 plus. Tomorrow it's only $8. It's going to change the consumer behavior because perhaps the consumer doesn't mind paying an $8 late fee and being late. So regulations, but keep this in mind, that regulations are going to drive a change in consumer behavior, which the institutions, analytics teams and the people who manage data are going to have to, change their outlook towards how things are going on. There is a lot of regulations coming up, but at the same time, I'm sorry, I need to refer to my notes because there's so much happening in the last 1 week. Just on regulations, I guess it's just the time of the year. On March 18th, the SEC charged two investment advisors of misleading statements about the use of AI. So what is perhaps is the first AI-related regulatory action. The penalties, and also there's a specific term which I found very interesting. It's called about AI washing. So the SEC has literally accused these companies of, using AI to or pretending to be using AI, or misleading. Sorry, the use of AI, and showing that they're using AI to not to be not discriminative and not not or not misleading consumers, but it's actually the other way around. So it's an interesting one, and I thought that this could be a trend which the regulators may catch on, because of AI washing may become as famous as greenwashing pretty soon.
So I think it's, go ahead.
Sorry. Yeah, good.
I was going to say, it's interesting. What's happening is there's a lot of new regulations that are coming out. And the key here is because of artificial intelligence data, it's easier to track. And I think that's largely a lot of the message that Ram is trying to get out here. Back to you, Ram.
Thanks. Yeah. The other things that is about, so we all have to now consider what exactly are the risks that are posing to our business with our increasing use of chat GPTs and AI tools and LLMs and all the works. Remember that a lot of financial institutions are opening up their APIs to fintechs. I think we do it all the time. And the rules are pretty much clear. I think the FDIC, the OCC, and another regulator, all of them came together last year in June and said that the buck stops with the financial institution. So whatever APIs you're opening for the fintechs, whatever you're doing, it's great, but ultimately the responsibility rests with the financial institution. So the regulators are going to be taking a very deep view of all these APIs that you're opening up and all these things that we are doing with fintech companies and all the new things that we're implementing. So it is important to understand the implications, the potential implications of all these actions. I also read that, in terms of just a piece of trivia, I read a paper which says that the DeepMind worked out a method to steal private information about internals of an LLM by crafting special queries into the public API. So I don't know what it means, but effectively what it seems to say is that there are ways in which these LLMs or these OpenAI, the generative AI models, can also be manipulated, can also be, should I say, can be, they're not exactly foolproof, as we would like to believe. So what do we need to do in terms of why do we need some specialized help? I think all financial institutions have to be keeping this in mind, that regulations are around us and they're getting more and more complex. While we get, while our focus is on the big ones like the interchange rules or the interchange cap, and all these, the 1071 rule, for example, which has been stayed for now, but there are other rules that are coming in. So while we are dealing with these big ticket rules, the ones which we understand, which I like to say that the rules for which we understand the implications on our business, but we also have to be prepared now for more complex rules and more regulations, which are not, which may not be exactly we relate to straight away. So I would say, like to say that the entire ecosystem of operations of digital, digital banking and digital or open finance that we are getting into will all require a lot of focus, a lot of, should I say, a lot of overview, all the way from everything what happens here on documentation or the fairness of the algorithms, the privacy and the security controls, things like red teaming, which is increasingly becoming popular now, and of course audits, and also explainability, explaining these rules to the regulator and what is inside your algorithms. The recent CFPB rule seems to be saying that the CFPB is not going to accept you're saying that if a loan application or if something was denied, why is it denied? You cannot just say that the algorithm or the scorecard refused the application. So more and more the regulators are now looking at how can you explain to the consumer, and also how can you explain to the regulator what exactly is going around within these complex models.
Yeah, it's really interesting. I want to highlight a few things that he's tried to bring out as we talk through some of this. For example, in November, the CFPB basically put out regulations to all of us, telling us to tell us yes or no as far as open banking is concerned. And we were supposed to respond. It came up 2 weeks before Thanksgiving, so we're getting into the turkey mood, and then we move into the holiday shopping mood, and then it was the first round was approved. And essentially what's going to do is, remember phone number portability? That you could take your phone number and move from one provider to another. The idea is, I want seamless movement of accounts. So I think one of the challenges that Ram, you're bringing out is there's so much regulation, etc. In the olden days, it was easy to get by with that stuff. But the problem right now is that the IRS tracks it, the CFPB tracks it, the NCUA tracks it. We've got so much stuff that we got to be careful. And even one of the largest credit unions in the country stood exposed a month or two ago when they basically said that their models had a bias where they were approving homes or unfairly denying loan applications on mortgage for particular communities. And that's kind of stuff in the past you could say, oh, that was a systems error, but we're running into more and more issues like that.
Yep. And I think the other thing to note is about the CRA, the Community Reinvestment Act, the update done to that in October 23. Very interesting update. It says the agency would evaluate lending outside the traditional assessment areas that enable digital delivery of products and services. To me, that covers everything, all the surrogates, all the other information that we have now access to thanks to the digital ecosystem that we are building. So effectively, we will have to explain, or any decisions that are taken will have to be explained to the nth degree. There is no getting away from this. And that's where I'm trying to highlight is that is this ecosystem, analytics and AI and all these infrastructure that we are building or we're getting into, are we ready for this? And that's something that we all need to ask ourselves, because as the rules get more and more complex, and as the demands of the regulators become more and more incisive and more proactive, it'll be a big stretch on all of us. Particularly, I would highlight the analytics teams and the data management teams, and we keep saying the data is the new oil and everything. But having said that, are we expecting a perfect storm of regulations, or is it already upon us? That's a question we need to ask ourselves.
Okay. Well, I want to say thank you to you because there's a couple of things you've done that are beautiful. I think we can all take advantage of it. His slides are really well put together. And I think from a graphics perspective, This is something we need to take to our boards. And it's a simpler way. Sorry, Zeke, I don't mean to say that board people, but you volunteer, right? And this is not your full-time job, right? So why do you have to sit through a 3-hour presentation that puts you to sleep? Why not take a 20-minute presentation and share some of this knowledge? And Ram, again, thank you so much for your time.